What's up, everybody? We're going to be breaking things down here in just a moment. We're going to be getting this going. I got some great guests coming on today. James Seyffart. We're going to be breaking down charts a little bit before he pops in, talking about what's going on with the market, some price levels that we should be watching. Is the rally over? Is this that drawback that we're starting to see before the halving, or is this just a little bit of chop? Well, we're going to talk about all that. We will see you guys live on stream here in just a moment. What's up, everybody? Got maybe a Band-Aid, Hannah Hughes, Atropine, Small Face, Alex Green, Raz Mazzani, Mark the Shark, Cargo, Sawtooth Hiker. We're going to get this going. I think it's time to talk about what's going on with these ETFs. So let's skip this timeline forward and let's get it going. All right, now as people pile in, how you doing? How you feeling? Are you bullish? Are you bearish? Let us know in chat. We got a lot of stuff we're covering today, and we got James Seyffart talking about what's going on with all the ETFs. Is the ETH ETF coming in May? Is that going to potentially be delayed? What do those timelines look like? What's going on with the price? I'm going to be talking about that before James hops in, but we're going to be talking about some levels, what we should be watching, what should be going on. So everybody hit the like, and let's get this going. What's up, everybody? How you doing? How you feeling? Markets are chopping around a little bit. We got to talk about some levels that we need to watch. And then I got the one and only James Seyffart himself coming on live onto the show in just a little bit, about 20 minutes or so. So we're going to be talking charts. We're going to be talking about all this capital flow, what it means into Bitcoin. How come we're not seeing a huge spike if we saw record volume yesterday? We need to understand how all these things work so that we can look forward into the charts. Not only what's happening right now, but have some sort of idea about how we can expect some of this demand coming into the market. Is it going to create a supply shock? So before we get going, right off the bat, I want each and every one of you, we got 145 people in the room right when we're starting. So shout out to each and every one of you. My name is Kellam. If you haven't been here before, if this is your first time, I can guarantee it's not going to be your last time. We break things down. This is positive, encouraging. We break down what's going on, and we do it as a community. And also, we've got the premium Discord as well, where we go a little bit deeper. And all throughout the day, everybody on the Discover Crypto team, Hit Network team in there, sharing alpha. So shout out to each and every one of you. If you haven't yet, hit that like button. Look down below the video. We just hit 10,000 subs, and it'd be an honor of mine to have you here in the community, because this is what it's all about. So let's talk about it. Where are you tuned in from? What city, what state, what country? And are you buying or selling today? I see the members in there. I want to see you dropping those emojis. Let me know how you're feeling. Are you bullish or bearish? Is this a dip that you're buying? What's your strategy? We got to talk about these things so that we can all, maybe there's a few buyers in here where everybody else is selling. This could be a good metric for us to really kind of gauge what's going on. It's nice to share these things because this is a community. So let's talk about a little bit about what we want to talk about. Now, first things first, again, make sure, I just reset my computer. My apologies. Let me go ahead and share my screen there. Boom, Google, right there. All right, there it is. Make sure you're giving us a follow here and joining the membership here on the BitLab YouTube. Get the emojis, and we're also going to be sharing a lot more content, pulling out from the premium Discord, and also some other just private member streams. So everybody get involved. I want to talk about a couple of different things. We got James on here in just a little bit, but we got to look at the price action. What's going on? Look at this. This is on the 5-minute chart. It feels like doom and gloom. Is the rally over? That's the question. Do you think the rally is over? Alex Green, if you can get in there on the drop a poll here, if you are here in the chat, I know you're sometimes working. Drop a poll in here. Do you guys think this rally's over? Do you think we're getting that pre-halving dump? You know, if we come over here and actually to this chart right here, to the halving cycles, I know we look at this all the time, but this is what we got to do. We got to talk about this. This is the halving right here. And we see the 2014, 2013, 2014 cycle. We also see this orange line here, which is a 2016 into 2017 top, right? But we're more interested in what's happening right here. We're more interested in getting some sort of dump into the halving. We have a pretty consistent sort of choppiness here where we had the market cycle bottom. Then we had a pretty big push up, fake people out, dropped back down. This was a pretty substantial drop all the way up here from, it's not going to tell me the price because this is counting the halving days, but I remember this is a pretty substantial drop right here. And then we have another large push up, pretty big sell off into consolidation. And then this rise right here is over 100% rise into about a 40% pullback. I mean, only about 20% into the halving, but this continued down for a little bit. Interestingly, in the last cycle, we had this huge rally that went all the way from about $3,500 all the way up to just shy of $14,000 before we saw a large drawback. And I don't care if you've heard this before, you got to hear it again. Pretty large drawback here pre-halving. And then we got the ultimately the black swan that happened that was just the last huge washout here, boom, before we came back up into the halving and consolidated for a little bit. Well, where we're at right now, look at the price action and the structures that we're seeing in the previous two cycles. We're kind of getting a combination of both. We're getting a pretty nice push-ups to the upside, and then about a 25-30% drawback, 20% or more drawback here. Similarly, as we pushed up here, came right back to have a double bottom in the zone. And when you look at this, think about this. When you look at this on a zoomed out level, looking at this chart, this price action right here really just looks like consolidation. Now, it was about a $7,000 or $8,000 range that the price was consolidating in, so we feel like it's not consolidation, but it is. When you zoom out on the macro, nothing much really happened here. There's a lot of testing of the narrative because this was this really, I mean, huge bear market, but also the sort of the belief or the trust, I should say, in the ecosystem was shaken in this previous bear market because of the cascading failures that we had throughout the entire ecosystem with I almost said BlackRock. BlackRock did not fail. With, what were they? Celsius, BlockFi, Voyager, what's the coin? Luna. And ultimately, there's others as well, but ultimately also funneling on this last sort of dump right here, the FTX collapse. There's a lot of shaken trust in here. And surprisingly, we had a smaller drawback than we have in previous cycles. This actually screams bullishness coming into this next cycle because we have so much on the horizon that is coming here around the beginning of 2 weeks of April. We can't know the exact date until we get much closer because the halving cycle isn't on a scheduled date on the calendar. It's on a schedule on the blocks. Every 210,000 blocks is when we get the halving. Remember, those blocks average about 10 minutes. Sometimes they're longer, sometimes they're shorter, which is why that date kind of has moved around from the 15th, and now it's projected somewhere around the 5th or the 8th. And we're regionally is all we're really concerned with. And ultimately, we're concerned with when the date actually happens and what we've seen historically happen, which is this beautifulness right here, having a little bit of consolidation and then ultimately strong bull market to follow. Now, interestingly, in this cycle, we have some of the best bullishness stories and narratives in history coming into Bitcoin. Not only do we have the Bitcoin spot ETFs that were just approved, yes, we're seeing a little bit of a pullback, but that's okay. Regardless of what all the news narrative is, I've been telling you all since January of last year. That's right. And I've talked about this day in and day out, and that's okay. You need to hear it again. That's this right here, this chart right here. I've been talking about the price action pushing up somewhere in the $48,000 to $50,000 range. Yes, you can see the date right here, January 29th, 2023. I talked about something, it's not going to be exact, but something that rhymes with this structure. And this is exactly currently where we're at. The question is going to be, are we going to get this, Or is there too much underlying bullishness and we do not get a 40% drawback or something that comes down into this golden pocket from whatever this move is? The question is, have we reached a local top or not? Let me know, all of you watching right now, do you think we've hit a local top? Let me know in the comments. Let me know right now what you're thinking. Do you think we've hit a local top somewhere in the $48,000 to $50,000 range? Do you think we're going to be pulling back from here? I'm curious what you guys think, because when we look at this chart, and I've had this since January of last year, there's a lot of technical speculation around this potentially being the local top, because when you look at it on the chart, let's get out of this chart right here. This 5-minute chart feels like doom and gloom. But what does it look like when we hit over here on the 3-day chart or even the weekly? Massive downtrend. We've had now started a very strong uptrend. Lots of higher highs and higher lows along the way. And where we're at right now, we talked about this yesterday, we have pushed up right up into where this target was suggesting, which is right here into this golden pocket, 0.618, 0.65, and we are there. The question is going to be, and we're going to have James Seyffart on here in just a few minutes, we're going to be talking about not price action, but we're going to be talking about something way more important than price action. And this is what you all need to understand if you're going to trade and invest in this market over time. If you're focused on price, you're going to be your account's going to be focused on losing. Know that. If you're focused on price when you're trading and investing, your profitability is going to be focused on losing. Why is that? Because if you're not focused on the data, the underlying data narratives rather than the news narratives, what's going on with the strength, with the money flow, what's going on with the liquidity, what's going on with the general interest, which we gauge by volume in that asset. Those are the narratives I want to follow. I want to use price to really identify where potentially to pull the trigger, but the narratives of the data, not the narratives of the news, is what's ultimately going to lead you to the promised land. And we need to realize that. So coming back over to this chart, things are looking quite good. Now, my cousin, he's probably in process of right now wiping some tears from his eyes because he didn't fully listen to some of the things I was sharing with him the other day. You know, he just really kind of started getting trading and made some really great trades. You know, I was giving him some direction and some things to watch for using the stoplight action protocol, finding at least 3 points of confluence of data agreeing with the probability of a move. If we do not look to those 3 points of confluence, 3 things that agree that are different types of data sets, then all we're doing is trading on our emotions. And if we're trading on our emotions, what we're doing is we're putting our money on the table to donate it to the game. So where we're at right now, incredible bullish trend. But when we zoom into this, and all of us have done this, we get in here because we get into a trade or we want something to happen, and we get in on the 7-minute chart or the 5-minute chart or the 2-minute chart, and we go, oh my God, it's over. Is it over? Or is this just part of how the market moves? I mean, I did not draw this line today, this blue line, let's see, this blue line that's on the chart, where does this blue line go to? All the way back here in January of last year, January 1st, 2023, into support that was lost into resistance for, I mean, how long was this resistance here? All the way 42 days, just the bulls are trying to fight through it and they just could not get through this line. This shows us that this line is going to be one of those areas that we need to use as a data point for where price action may interact. So when we zoom in on this and we see where we're at right now, we are walking a tightrope, because not only do we have this massive sort of basically midterm macro trend line that has acted as both support and resistance, we are currently in a situation where this line is acting as support. Now, what's interesting about this is we've broken through this local top here, which was done on December 6th, which the high, why come it's not showing? There we go. The high here was, I'm looking right here, OHLC. This is open, high, low, close. When you put your mouse over any particular candle, it'll tell you how high that candle went at any given point, how low it went, where it opened, and where it closed. Now, this one went up to 44,729. We broke through this line. We've also broken back through this as potential support. So this is no longer acting as support. So what do? We look to the next level down. The next level down we have 2 trend lines that are coming in as confluence here, but we also have this dynamic support zone right here on the BitLab trading stack that is suggesting we see this expanding, but now we're getting to the point where it's starting to contract, meaning some of that underlying bullishness is starting to wane. That momentum that was carrying us ahead, the bullish conviction is it's starting to evaporate a little bit. Now, why is this? Now, why, when one of the biggest news stories in the history, bullish news stories in the history of Bitcoin just happened this week with the Bitcoin spot ETF being launched, why are we seeing some trouble in price action? I thought it was supposed to explode from here. Well, we can't trade on hopes and expectations. We trade on data. And the other data points that are outside of the news narrative are those technical data points that I've been sharing since January of last year, that $48,000 level on Bitcoin, the golden pocket for the macro move from the previous top to the more recent market cycle lows in December of last year. The 61.8 fib is right there at $48,000. So not only did the ETF narrative bring us right up to that level, it launched and we barely broke into that gap between 48 and 50,000, the golden pocket, only to right now we're starting to see some price. Right now we're starting to see some profits being taken out of the market. And who the hell is selling right now? I'm asking that. Why would you be selling right now? I'd be looking for opportunities to buy in the event that any price action went to the downside, because we have this positive news narrative, but we know it's buy the rumor, sell the news. And this is what we are seeing in the market right now. So we can't be shocked by it. We thought the ETF was going to push it higher. Yes, I would argue that it is. It doesn't mean it's going to happen immediately. It doesn't mean it's going to happen in every candle. We've got to be patient and watch how this macro picture unfolds. That's what we got to do. So when we come back over to this chart, okay, this is a 3-day chart. Let's get a little more clarity. 3-day, let's go down to the 4-hour. Okay, look at this. This was telegraphing this in this move right here. Bullish impulse to the upside, breakdown. Bullish impulse to the upside. And we have this wick here. This was yesterday. This makes sense. This is when the news narrative was fully, the wind was kind of blowing into the sails right here, and everybody's expecting something to happen. And on the expectation of something to happen and the awareness of the expectation, institutions, big market players, smart money has the ability to push the market in that direction, only to then use that direction as exit liquidity to drop the price the other direction, therefore flushing out the liquidity, the over-leveraged longs, flushing this out. Now what are they doing? Flushing out the liquidity to the downside. The question is going to be in this region right here where we currently are. This is that blue line we just talked about. And we see we have not only that, we have this descending resistance level right here. We have a zone right here that is also fairly close right here at 42.5 to this rising level of support. And you guessed it, if we zoom back, let's look at how far back this goes. All the way back, before even that January line, all the way, let's do it from right here, all the way back to September of 2022. And we are in a zone right now that can get fairly challenging area to truly grasp in terms of, is it going to go up or is it going to go down? People get mad at analysts when they say it could do either, but we have the levels that we have outlined to pay attention to and see what's going to happen. As it stands right now, we're seeing a little bit of lack of momentum here on the charts. We can see this with these white waves, these white waves that have the green and the red. These white waves are the momentum, underlying momentum. And then we also have, when it's green, that means there's a lot of buying pressure in that momentum. That's bullish. When you see red, these red bars, it's a lot of selling pressure, a lot of selling volume coming in. More than the previous average of candles that we have scripted in here. And then, of course, we have the money flow right here that is flipped negative right here, option V. Let's see where that is on the chart. And wouldn't you know, right where it flipped, money flow flipped negative from this positive flow here to here, this is where we also see the price action lose the trend signal line. And so we're getting a lot of different things. And the stoplight action protocol, the system that you should be using to make sure that you're keeping yourself in line and taking smart trades, is identifying what different data sets that you want to utilize. And I have my own system and I share it with you all the time. Identify the data metrics that you like to utilize when you trade and that you understand first and foremost, and stack probabilities in your favor. Find green light, green light, green light, okay? If you're getting several yellow lights or a green light and a red light, meaning a bullish or a bearish, you're getting mixed signals, that's not a trade setup. And as we're sitting right here, we see the money flows going negative right here. So if you're trying to be bullish and you see the money flow flip bearish, that takes you from a green light to a yellow light, maybe even a red light. But what we're seeing is stochastics also topped out, coming down. RSI topped out, coming down. Money flow negative. Momentum, higher high here, lower high here. We're seeing signs here that the only spot that I'm looking to on the chart right now that gives me an idea of something is like a full all green lights go for a trade is on a very short-term time frame, potentially taking a scalp short here, because there's no signs I'm seeing on this 4-hour chart anywhere in here that suggest, hey man, I should be taking a long. Now, the question also comes back to what is your time horizon? If you're wondering if you should be buying because you want to hold for 18 months, go ahead. So long as you can endure potential downside before the true parabola goes to the upside. It all comes down to what's the matter of your conviction and your inability or your ability not to capitulate away from what your strategy is. So we're testing right now. We have the M formation. We have a drop. So now what we need to look for is, are we going to get something like this? A fall, basically a little bit of retrace, a continuation, and then what's going to happen in this region? I still think that we have a strong possibility of coming down and flushing down into this area, just under 40,000, the 39.6 to 38,000. Remember, we still have the CME futures gap down here. And what's going to be interesting is going into this weekend, this evening, when the markets close, we are also now going to have to look to what the gaps are on the Bitcoin spot ETFs, because they close over the weekend and they open back up in traditional finance hours. So now we're going to be looking to the CME futures and the ETF and what's going on there. And there's probably going to be some adjustments that are made. And we can't just look at this. The first 2 data points on this are going to be our metric. No, we're going to have to grow and adapt our strategy over time with this, because there's going to be some flow between the two. There's going to be people that have Bitcoin futures ETFs that want to move to spot ETFs. There's going to be some hedging between there's so many different things at play right now. And I think a little of the uncertainty, let me say this right now. I think a little bit of the uncertainty in the market right now has to do with people are not very sure what the Bitcoin ETF means in the immediate future. All this volume that we saw on day one, was it a little bit of a front-end loaded volume with people really getting in on the first day? Was it capital flow, especially in Grayscale's case, of people getting out of their positions and getting out of the GBTC trust, not wanting to be in the ETF at all? They've seen their profits from that negative premium realizing back to zero. Were they rotating out of GBTC into other ETFs because of the higher management fees? There's a lot of things that need to play out here over the next couple of days. And then in addition to all that, and we're going to be talking to James Seyffart here in a few minutes, what is the consistency of the flow on this? If we see 4 billion, 5 billion yesterday, and we see 1 billion today, and we see 500,000 on Monday, that's going to be a little bit telling, and that may take a little bit of the wind out of the sails of the bulls in the spot market. So we need to pay attention to all this. We need to stay vigilant and not just have our bias completely blowing smoke up our ass about where we think the market's going. Let's look to the data, not to our emotions and our hopes. Okay. Look at this dashboard right here on the BitLab Trend Fuel, 4-hour, bearish, bearish, neutral, neutral, bearish, bearish. This is leaning bearish. So let's get down to the 1 hour. We're seeing a little bit of a flush out. Now, again, I've talked to a lot about this. This is one possibility of it potentially going to the downside. I'm still incredibly bullish. I still think we have an opportunity to go up there and break through 52 up into 55. But right now, when the time frames we're looking at, the 4-hour and the in this case, the 1 hour, things are looking bearish if there's not only a strong bounce here, but a shifting of the data set. There's a shifting of what's going on, because it's looking right now, there's 2 options. This could be a flush out of long leverage, over leverage right in this zone. This also could be, the question is going to be on this breakdown, is there strong buying pressure to basically work this back up? The question is going to be on a rise. If this does bounce to the upside, this is the level that we're watching right here. What is this level? It's not only this low that found support here. We found support right here too. If we zoom back out, found resistance here. We also see a little bit of support here and quite a bit of more resistance over here. The question here, in just a second, we're going to be jumping to James himself talking about the ETFs. And as I said, what is more important than all this TA and all this astrology for charts, we got to look to the most important thing in this market, which is what is the underlying data of what's going on? How do we look to the future? How do we look at the trends that are being established and try to forecast what's going to be in our best interest? That's what we want to look to. So when you see this breakdown right now, as we're seeing, don't jump out of the plane and say, oh my God, it's over. Understand and ask yourself, what's my strategy? What's my time horizon? And if this does bounce here, what level do I need to watch for it to potentially clear? So before we continue on with charts, and we're going to do a lot more charts here in a little bit, got a special guest coming on right now, and it's Mr. James Seyffart. How you doing, my friend? We've been talking online for a month or two about all this stuff, and everybody in the crypto world has been following you nonstop. You have been the rising star in the world. So how you doing? How you feeling about all this this coming to what feels like a close? And you know, it's only just beginning.
Yeah, I mean, this is
muted.
Oh, hey, can you hear me?
I can't hear you now.
Can you hear me now?
Talk to me, baby. Let me see. Oh, hold on one second. Check.
Yeah, can you hear me?
Yeah, there we go. Sorry about that.
All good.
So welcome to the show.
Yeah, thanks for having me. Yeah, let's say this is the peak. For me, this is it. It's downhill from here, but yeah, it's more a relief than anything. We stuck our necks out early when a lot of people still were skeptical that it was going to happen, and we did the same thing with Bitcoin futures ETFs, and we did the same thing with Ethereum futures ETFs, and yeah, I'm just happy that we were actually correct, because it would have been absolutely miserable. Honestly, I have not stopped talking to people or being on TV or radio or podcasts or YouTube shows, you name it, for the last 4 days. Yeah, I'm just happy it's over. I'm happy we were right. And like you said, yes, all the hype and stuff around it is kind of dying down a little bit now, but we're still going to be covering the race. And I feel like a lot of people like trying to figure out what's going on the internet and social media, like they think this was like a complete loss, and like they forget the fact that this was an 80% run up and an approval of a product, and the volumes were healthy. There's a lot of like really solid things happening right now in ETF world, and I feel like crypto/Bitcoin world is like just not comprehending that this was just because it wasn't like a smashing success and breaking every record, like that it's not a good day. But it was a good day for the vast majority of these funds yesterday.
I mean, I agree with you on all fronts. And I think as an analyst myself, one of the things that I'm sort of trying to wrap my mind around is this is a whole new data set and whole new tool sets that they're not even fully established yet as to what we should be watching and how we can track some of this stuff over time. Of course, I have the different tickers up on my charts that I'm watching, and I'm trying to watch some flows. And you saw the OTC breaking records over yesterday on Coinbase. And I want to start there with you and everybody. I think we're going to be asking him also about his thoughts on the potential Ethereum ETF, but we got to talk about what's going on with his Bitcoin ETF first. And that is with his Coinbase OTC flows yesterday that were obviously disproportionately larger than what we saw the actual volume flows on the exchanges. Now, I know that all the volume flows, on the ETFs. Now, I know that all the volume flows that we're seeing for the ETF doesn't just represent buying. There's buying and selling. But that being said, the 7 billion or more that they had in OTC on Coinbase, and of course, that's not all going to be towards the ETFs, but majority of it is. Do you think that there's a little bit of front-end loading happening from these different ETF companies, basically trying to forecast and buy stuff if they think price is going to? Are we going to see stuff like that, or can they only buy in kind for what was bought for that product that day?
Yeah, they can only buy for what was bought for that product that day. And I've got, from the people I've talked to, the numbers that people are citing for the OTC trading is not accurate. There's some bad on-chain analysis there, so it's way overstated. We'll know exactly how much money went into these things. We have about 700 million that went in on day one, which I don't know why, but for some reason everyone thinks that's a really bad day. I've been concerned about possibly seeing massive net outflows because GBTC was listing the same day. it kind of looks to me, based on the price action and what we've seen, that it might have been like literally near zero. We don't know Grayscale's flows yet because of the way that the mutual fund accounting is done for their fund specifically. So we won't even know what happened with GBTC until tomorrow. I'm sure Coinbase and Grayscale and some other their authorized participants know exactly what happened, but I'm assuming a vast majority of their volume they saw yesterday ended up as selling. But what we try to do is like gauge, like, this is volume, how much could that be in flows? But it's an art, not a science. Like, you could have more flows than you do in volume if you do basically similar to OTC Bitcoin trading. You could do OTC creations via like reporting your trade to FINRA, and that doesn't show up on the tape necessarily. So there's all these things that people like trying to cover this in crypto Twitter and Bitcoin Twitter that they just don't know what they're talking about, and there's a lot of bad takes out there. That said, this wasn't this was a successful day for the vast majority of these ETFs, which I feel like everyone is missing. Like, it's a good volume. There's been significant inflows to many of these products. Yes, a lot of it is recycled assets, which is what I've been saying is going to happen. My note from 2 days ago was basically saying we're going to see a lot of recycled movement from things like Grayscale, specifically GBTC will be the #1 losing assets, but I think Canadian ETFs are going to see outflows that will find their way into US ETFs, and BITO, the Bitcoin futures ETF, I think is going to see outflows, and people will coalesce more towards spot Bitcoin ETFs, at least longer term. So yeah, I would just like try to push back against this narrative that it was an awful day. I'm not saying it was like an absolute smashing success, but it was.
I don't think it was an awful day at all. That's why I think it's so funny. On the bright side of it for me is the uncertainty that's kind of stirring a little bit in the market. Some people want to say that some of the drawback on the price action right now, and we're not going to talk about the actual price action, but just looking at the price action falling, you can say, oh, it's because the uncertainty, maybe it was a bad day in ETFs, but technically speaking, there was already areas that suggested a pullback could come regardless of the ETF. So looking at all this, you know, where do you think the dust settles in terms of this capital rotation that we're seeing with GBTC? Because GBTC, it's not just it rolling over from a trust to an ETF. We also had a lot of people playing the negative premium hedge, right? So are we going to be able to track metrics of how much of the money that's flowing out of that is flowing into other ETFs, or is it because it's going through cash and then back into something? Is that something that we're not going to be able to track?
Yeah, so you won't actually be able to track it like from this point to this point, but you can see this happened over here and this happened over there, and they're somewhat correlated in opposite directions. You can kind of guess that that's what's happening, but exactly, this is what I've been saying for a long time, is we're going to see massive outflows of GBTC. People were buying it not because they wanted exposure to Bitcoin, they were buying it to play that discount. And that's like basically a special situation type trade, not necessarily a trade for Bitcoin specifically, which is what you just said. That said, I mean, if the thing traded sideways, yes, it went up on the news and stuff like that, but for the most part, this was priced in. And I guess some people really thought it wasn't going to be priced in. That said, like I have been saying, and I keep saying to people, like, look to see what happens. If in 12 months from now we don't see any meaningful inflows, yeah, then this was a flop. But like looking at like the day one as though this is going to be how things play out over the long term is just insane to me. Look at what happened to BITO. BITO launched in day one, right into the mania, $1.5 billion of inflows in 2 days, and then it was just utter collapse and never got used again until like the last couple months for the most part, right? So stop looking at. I know a lot of people are traders and they're focused on this stuff, but there's a lot of negativity out there that I don't think is indicative of like what's actually happening on the ground floor here.
So I've got a question, one more question about the Bitcoin spot ETF. Then I want to ask you a little bit about the potentiality of the Ethereum ETF and what your thoughts on that are. And that is with the, I know, I don't want to say I know. It's my understanding that with these Bitcoin spot ETFs, it seems like a lot of people are just expecting that the flows that we're seeing on the ETFs was going to result in people buying off exchange. And of course, that's not how it's working. I think currently right now was it like after daily close and they have to basically settle what it is to get the purchase in kind. Currently it's through OTC, at least that's how it's set up. But is there an event and is there any sort of time horizon or threshold that we get to where there's some sort of supply crunch in terms of the OTC availability to fulfill that? And is there an opportunity for them also to split buying from OTC to exchange, off exchange as well? I think that's something a lot of people are interested in.
Yeah, I mean, what you got to realize is the people making markets in this and that are the APs and these desks are like the best traders in the world in the traditional financial world, and they're using the best traders in the world, the institutional side on the crypto side. So they're going to get exposure to the Bitcoin in the best way they know how, in the cheapest, most efficient way without price impact. That said, if there's enough demand, it's just like buying Bitcoin itself, right? Like the price will rise to meet demand or fall to meet demand, right? If it's worth what somebody else is willing to pay for it, and if there's flows coming into ETF, it's not like it's some weird thing. It's like that's just basically new cash trying to buy Bitcoin. So like it's not really that complicated to think about. Yeah, the plumbing is a little bit complicated on the back end, but all you need to realize is cash coming in needs to be deployed into Bitcoin, and that's all there really is to it.
And I think you would agree with this. Regardless of anything that's happening on a 5-minute candle, a 4-hour candle, or even a weekly candle, I think despite, just to dispel anybody's sort of fear right now, this is probably one of the most bullish things in the advent of Bitcoin since its genesis, because it provides access to capital that has not had access to Bitcoin, whether it be for legal reasons, board reasons, all these different things. So is there any other thing that in terms of the Bitcoin spot ETF you'd like to talk about before we jump into the ETH ETF?
Yeah, this is a long-term play. I mean, yes, now it's available. We need to see if there are people who actually want to buy it on the other side that this is targeted at, right? And there's no guarantee that that's the case right now, or I guess ever will be. I'll take the other side of the ever part, but we're going to see what happens here and how people are going to use these things, whether it be institutions or advisors or brokers, you name it. But every podcast I've done, spaces, you name it, I've kind of tried to steer people away from looking at what's happening in day one and day two and focus on the long term. But that's not in crypto Twitter or Bitcoin Twitter. No, they can't do that.
So I just came in my head. I want to ask you before we jump into the ETH stuff. Merrill Lynch, Vanguard, all this stuff sort of going on. Do you think it's more likely that they're truly giving pushback because they're trying to limit access to this? I mean, we've seen Vanguard, some of the exposure they've had to different Bitcoin-facing products. This doesn't make sense. Do you think there's a possibility here that these, all financial institutions probably in some regard, if they want to step into the future, seems like it's more likely that they're probably working to get their Bitcoin-facing financial product offerings. It seems like that's more of a reason why they would limit this rather than, oh, we don't want you to have access to that.
Yeah, no, it's actually I'll put my tinfoil hat on different times, but not for this one. They just don't like the asset. I mean, Vanguard is never going to launch a Bitcoin ETF. I get that question all the time. They never will. They don't even have a gold ETF. They don't like things that don't have cash flows. It's just their ethos. The other ones also don't surprise me. They have a heavy-handed approach about what can and cannot be bought on their platforms. They're not completely self-directed brokerages. Yes, they're self-directed technically speaking, but for the most part, they're very restrictive on what you can and cannot buy. It's like there's same restrictions on some leverage ETFs in many of those platforms. Like you cannot buy them with the UBS and Merrills in many cases, right? But Vanguard is the one that surprised me because that's very self-directed. Usually you can do whatever you want as long as it's trading on an exchange, and they're allowing people to still buy BITO. So from that perspective, it's shocking that they're doing this. But from the perspective of Vanguard being against Bitcoin, not shocking at all because they don't like anything that doesn't have cash flows. Yeah. So that's the way I'm thinking about it.
So Ethereum ETF, we can already see some of that. People want to speculate in the price action on the chart that this is why it's kind of moving up a little bit in the ETH to BTC chart. But I would argue a little different on that. But people now are wondering, is ETH next? I think you put out some metrics the other day. I believe you did. All the times I see dates with different tickers, I'm like, that James put that one together, even when other people share it. So is May a sort of, are there some deadlines coming up in May? I think I saw, and is that legit, or is that one of those deadlines that can be pushed every 74 days or something like they did with Bitcoin?
Yeah, there's other deadlines that can be pushed between now and May, but May 23rd is the equivalent of Jan 10 for ARK. And 21 shares. So VanEck and ARK actually filed on the same day in September for spot ETH. But for some reason, with the way that they were published to the Federal Register, ARK is actually 1 day behind. But it doesn't matter if they treat things the way that they handled Bitcoin; they'll approve them all on the same day. That said, my base case is yes, we're over 50% odds that it will get approved, probably in the 70% range, but we haven't officially written it yet. But that's what we've kind of talked about, Eric Balchunas and I. So yeah, we're thinking it's going to happen, but we're nowhere near as confident as we were with Bitcoin. There's too many differences with ETH. A huge crush of the Bitcoin ETF approval was the size of the CME market and its impact and correlation to spot markets. Ethereum futures are much smaller. So that's like
much younger too. Yeah.
And younger, yeah. But the other everything else kind of points to they're going to approve this thing in my view. Largely because one, we have the futures trading on CME. We have now Ether futures ETFs trading on the stock exchange. So if we look at the way that the DC Circuit Court of Appeals handled the Grayscale lawsuit, based on the approval of Bitcoin futures ETFs, they're probably going to handle things the same way for Ether. But ETH has staking. There's a whole bunch of other things, proof of stake and stuff like that. It makes it a little bit different. There's also other things you can talk about, like the way the wallets would be held is going to be different. So the SEC is going to have to dive in on the nuances and differences between Ethereum and Bitcoin. And it's entirely plausible they're just not ready yet to allow this. That said, the other question I often get on this, which I'm assuming you're going to go to next, is the question about staking. And like I said, I think this is going to happen, but I do not think staking will be allowed when it is launched initially. But yeah, I do think an ETH ETF will happen this year, but nowhere near as confident as we were on Bitcoin. And we need to dive in, and there's not really been any movement from the SEC on the spot ETH side of things. So we have no real insight.
They've been
focused on other things. Yeah.
I mean, I can't believe I'm saying this. It's actually it's a great thing to see in reality, but the feet dragging, with Gary Gensler and the SEC over the last many years, I'm actually incredibly thrilled to see that they were able to get the approval and on exchange trading the next day. It's just kind of shocked me that they didn't do anything to drag. I mean, it all comes to, it all makes sense though with the night before they have the giant kerfuffle that nobody could have expected, which I do think put a little bit of water on the what's going on the next day. But I mean, yeah, I agree with you on ETH. I think there is an ETH ETF coming, but I'm probably 50-50 on that because of all the reasons you just mentioned. There's some technical differences, and I think I could be wrong here. I think that would also put pressure on kind of some resolution on some regulatory clarity regarding that side of the crypto market. Because Bitcoin and crypto, I look at as two different markets, and I think that there's so much uncertainty about how to designate different parts of the DeFi sector and ETH and all that. I'm a little fearful that delay would be them trying to figure that out and realize that they probably need a couple more regulations before they can offer security of something on that side. But I would be thrilled to see it happen.
Yeah, I mean, I was in your camp completely, but so like from the way I think about it, I agree with the Bitcoin and then everything else. But I think the SEC has kind of gone, it was Bitcoin and everything else. And then once we got word that they were going to likely approve the Ethereum futures ETFs, I basically took Ethereum out of that camp and put them over here from the regulatory perspective of the SEC. But it's not a done deal yet. But implicitly, the SEC has, in my view, accepted Ethereum as a commodity. That said, the other risk I didn't even mention that I didn't talk about is all it takes is Gary Gensler going to war over whether Ethereum is security in the same way they've done with Ripple, and you're not getting an ETF until that court case is done. That said, if they do that, it's not just going to be the crypto industry on the other side, it will also be the CFTC fighting against their sister agency. So that's why I think it won't happen. I think they'll just let spot ETH happen, and then he's going to just continue to wage war on the entire rest of the crypto landscape.
No, I mean, I completely agree with that. And I know your time is limited. You're in the Super Bowl week of nonstop interviews. So I got one last question for you. Everybody, a lot of people have been trying to draw a correlation with Bitcoin spot ETF, and this will happen again with the ETH ETF if that comes out, with the advent of the gold ETF, and looking at that 8 years of up after 6 month period of down, and then now I'm looking at these as obviously these are two different types of assets, and also in a completely different place in the world where we are with technology and interconnectivity and virality, and also people are growing disinterested with the status quo of governments and all that. So there's a lot to be said with all this. There's differences here. Do you think that the Bitcoin spot ETF and having institutional players come in and et cetera is going to change the shape, the market dynamics of the Bitcoin cycles going out because we have this regularity of capital flow and channels that are coming in?
Potentially, yeah, but it's going to take time before a lot of these channels are even buying this thing. That's why I keep saying it's going to take, it could take 12 months. It could literally take multiple years before some of these institutions would even consider buying one of these. So this is a much longer term play. Like I keep saying, I feel like a broken record here. And then you look at the gold ETF. It is the most analogous situation we can look at, but it's not truly analogous because there was no way to really buy Bitcoin as a retail investor. I mean, to buy gold as a retail investor before the ETF, right? You could go down to your pawn shop or buy coins from one of those commercials on TV, you name it. That was the way you got exposure to gold, but you couldn't do it in your financial accounts or your financial platform. So that is not necessarily true with Bitcoin, right? Like you could be in Africa and you could download Coinbase or some platform and get exposure to Bitcoin. I could do it, and you've been able to do that for years. So
Yeah.
that's one thing. But this does open more for trading and bring all these other types of people potentially in the fray. That said, also you look at gold and the launch and the run up, it was like flows and price and performance with gold were basically like 1-1. But you got to remember that was right before the great financial crisis.
Right.
A lot of central banks were buying gold back then. It wasn't just the ETF, so it was a good timing more than anything. And it went all the way through 2011 essentially. That the people were using those things heavily. So I don't think it's completely analogous. The way it is analogous is that now this is the most recent asset that ETFs were the bridge for. So the last time they created a bridge to a new asset class was gold, physical metals. Before that, you really only have to look at bonds and different types of equity markets around the world and specific types of different bonds like that and asset-backed securities. But the first real complete new asset class that a ETF created a bridge for now is Bitcoin.
So James, I know that you got to get off into the world, whether it's to another meeting or to actually go and sleep. But I appreciate you coming on. Is there anything you got coming up? Is there anything people can look to follow you on, or any newsletter, anything that we should point people to find you?
Yeah, I mean, if you're a terminal client, that's where I do all of my work. So that's where 90% I would tell people to reach me. But obviously, I'm also very active on Twitter at JSEYFF. So I do a pretty good job of sharing certain aspects of the work I'm doing on the terminal for our clients, and happy to share it with the world on Twitter as well. And often getting a lot of debates with people right now. Right now, the debate is around how awful the launches were versus reality that they weren't that awful.
Well, you know what? Everybody wants the God candles immediately. It's like, listen, look at what we did from BlackRock's announcement until the beginning of this year. We've seen astronomical price gain compared to any other asset in the world. Things aren't bad. There's going to be some buy the rumor, sell the news. We have to fight through that battle, and this is also just how market cycles work. So in the long run, it's going to be a positive thing for the space. And James, you've been a positive thing in the entire crypto ecosystem and traditional ecosystem, talking about Bitcoin and letting these people know there's so many myths out there and people don't understand. So thank you for coming on. Thank you for all the time you put into this. And I hope to see you and shake your hand, have a beer with you in person sometime when I'm back up in New York.
Yeah, would love to. Yeah. Thanks for having me on. It was great.
Absolutely. I appreciate you, my friend. I'm going to jump back over now. Everybody. Sorry. There we go. Everybody. Make sure that you follow Mr. James Seyffart, which is, I'm going to pull up his Twitter right now. It is, give me 1 second. Okay. Right here. You can give him a follow at JSEYFF. He shares great information on, what's going on with ETFs, dates you should be watching, all kind of stuff. He's really just been an absolute benefit to the entire crypto ecosystem, really breaking all these things down for everybody. So hit the like button if you like that, having people like that on the show, inside this world, helping us, give us this data that we need so we can really figure out what the hell's going on in these markets. So let's go ahead and dive back into these markets before we wrap it out. And where is, here we go, right here. This is what we were talking about, this line, jumping right back into it. We're testing this liquidity in this zone right here. So what does the BitLab volume say? Let's go down to the 24 minutes, see if we got any. We have no, let's see. We have no, I don't think. I'm looking for some, there we go, liquidity zones. So these are order blocks right here. Show us where there's a lot of order book interest in large groupings of large orders coming in. both buying and selling pressure. And we can see we lost this order block zone right in here, lost all these lows, and price is coming down. And look, not only do we have this rising level of support and this falling level of support that are down below us, we've lost this and we're testing this, and we have this order block here with another order block directly below us. My argument would be this: if the price action tests into this range and cannot hold this range, I do believe we're going to go down there and clear that 39.6 and likely go lower below that to test down into that 36, maybe 36, 37,000. Why is that? Because when we look at this chart right here, and I'm telling you guys, you got to pay attention. It's such a great metric to watch. The short-term holder cost basis, which is right here at $37,000. The 21-week moving average is right here at 33.8. And I'm going to tell you something that's very bullish about this. The 200-day moving average right here at 32.8. All of these important levels, when really looking at a macro trend, bullish or bearish, you can utilize these as support and resistance. And if they're lost, you can tend to challenge the idea of what sort of trend you're in. And the case that all three of these are above this previous range high gives me very strong conviction that if the price action does come down, does lose, look at this. Well, it's almost like we have a large support line right here as well. You can just imagine it, chart vision on the chart. If we lose this and break down past those levels that we were just talking about, we've got a huge, basically, buffer zone down here with a lot of people that are going to be looking at this. A lot of smart money, market makers, even retail are going to be looking to this area down here, smart retail, I should say, not dumb retail, as dream buy opportunities to take advantage of being in before this happens. If we get that retrace to the downside, we've got a huge number of different levels that we can add limit buy orders to. And if the price falls below that, as long as you have conviction, and remember, this is not financial advice. This is talking about strategies for people that have won historically in markets. This is what they do. They break up their entries. They look to levels in the chart and say, what are some areas? Maybe, okay, I think it's going to come to here, but what if it goes beyond that? Then you also put in your orders at these other levels that you see on the chart. And we've already marked them out. We've been marking these out for a year on this channel, talking, and we've had such a high hit rate. We've had such a high hit rate talking about where I think price is going, breaking these things down and having the price come back into the zone. And also look at this rising level of support. This is another major level, rising level of support that goes all the way back here to November 2022. And just notice, as this price action has consolidated sideways, sometimes you feel like the price is doing nothing, but in reality, it's setting up stronger cases, stronger confluence for areas if price moves to different levels. And in this case, look at this rising level of support has come all the way up. Now, if we were to drop straight down from here, this level of support is now in line with where this previous range top was. So not only do we have the short-term holder cost basis, we have the 21-week moving average, the 200-day moving average, and this midterm macro support line that is yet to be broken, coming all the way up in line with where this previous range high was. So in a bearish case pre-halving, my bearish case pre-halving, which is still ultimately super bullish, is if the price action works its way down, loses this level, comes down, clears the order CME futures gap, which is here, the $38,000 to $39,000 range, right in this sort of zone right in here. If we lose that, then we see the levels that essentially you can set up buy order in this region, a buy order in this region, a buy order in this region, which is roughly right about where this is all the way at 33. Short-term holder cost basis is up here. I think that if we come down, that we will find support on that short-term holder cost basis regionally in this zone. Maybe lose it on a wick basis, on a weekly candle or something like that. But I would argue that the underlying bullishness of the market, despite any short-term bearishness, is such that there would be strong buying coming in on the way down here. So don't get yourself caught in a trap because it's going down that you're committed. Look, we are in a bullish trend. In bullish trends, you look for buys. In bearish trends, you look for sells. Okay, you can short here, short here, short here, short here. You're not If you're a pro trader, you can short here and trade along here and then try, but you're just going to give yourself a heart attack if you do that if you haven't been doing this for years. In this case, look, once you establish that, boom, we have a higher low, then on this next pullback, you're looking to this previous range high for a potential buy opportunity. Look at that. That was perfect. On this push up here, we didn't quite break this level, so you really want to make sure that we hold this level. In this case, we did. So buy opportunity, not here, but once we're establishing higher lows. And then the breakout of the zone, that's your next buy. And on the move up right here, what happens after you have a move up? We have rise, retrace, continuation. Retrace, continuation. This really tested the nerves of all of us, but now we have a rise. What's the next step in a rise, retrace, continuation setup? Retrace. We just had the biggest news story ever break and actually come to fruition with the Bitcoin spot ETFs. Now people are overanalyzing the data on what those flows are and what it means. The narrative is gone, and therefore that bullish wind is gone until we see that exposure actually come in to meet and take away some of the supply side of Bitcoin that adds that supply shock and drives demand up. And part of that's going to be the speculative nature when people are watching these flows, and if they consistently are growing faster than expected, or if there's no flows at all after next week, then we are going to get that pullback to the downside. So we need to pay attention to that. Before we go, I want to look at Ethereum. Ethereum, looking at here on the 3-minute chart, I was scalp trading this earlier today. Let's look at this on the 8-hour. Rise, what do we get next? Retrace, continuation. Question's going to be, we're at a state right now that we may not get a rise, retrace, continuation. We may get a rise and then set up into another structure that ultimately breaks down, much like we were just talking about potentially on Bitcoin. So things are right now in a state of uncertainty because of this new data set, this new narrative that has transitioned from being a driving narrative to being a narrative that we're wondering how it affects the market. So that being said, let's stay safe out there. Let's be patient. Let's watch what happens over this weekend. There's no telling. New interest coming in. There's and heightened emotions in all this. There's an easier ability for these market makers and smart money to push price around. What do I mean by that? This is pushing price around up here. This wick here, this wick here. It's trapping people to the upside. Everybody going, yeah, okay, I'm gonna push them a little further, and then I'm gonna sell and take their exit liquidity. I lost my camera, but that's okay. I'm wrapping it up anyway. I love you guys. I appreciate you guys. Oh, the camera came back. No, it didn't. There it is. I love you guys. I appreciate you guys. Let's stay smart. Let's stay vigilant. Every one of you members that's in the house, let's drop some lab coats. Let's drop some lab coats on the live chat right now. Make sure you're checking out bitlabacademy.com. We talk about all this stuff, trading fundamentals, breaking down different metrics, how to go through the psychology of trading, understanding on-chain analysis. These are all individual 5 to 9, sometimes 15 minutes, about 8-9 minute lessons on each individual topic, how to read each individual type of candle, what they mean, chart patterns, indicators, all the different indicators, RSIs, stochastics, Bollinger Bands, Ichimoku clouds, the BitLab trading stack, trading strategies, all this. And then also, of course, with all that, we have the BitLab Premium Discord, which we have the community in there, DZ in there, Joshua Jake in there, myself, TA Tim, breaking things down, John Dalton sharing magic every day. I love you guys. I want to see everybody roll call right now before we go. I want to know what you are doing this weekend that you're looking forward to that has nothing to do with crypto. Let us know in the chat. Drop it down below. We got to keep life balance. We got to keep life balance in all this. I'm going to just keep it on the screen. Again, check out bitlabacademy.com. I look forward to looking at y'all's comments, seeing what you guys are doing. And I appreciate you. I hope you all have a wonderful day. And that's all I got. Adios, muchachos. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Check out bitlabacademy.com. Hit that like button, sucker. Get in the BitLab Discord premium community where we got all those cool mofos in there sharing their ideas, their thoughts, their setups, their trades, their charts, and their feelings. Have a good day, everybody. Have a good weekend.